Mr. Onofowokan joins us now on Business Morning. Thank you for joining us and Happy New Year.
Happy New Year to you, sir.
Happy New Year to you too.
Good to see you.
Thanks for having me.
So as an operator on the manufacturing sector, what challenges would you say you had in 2020 and what did you learn from those challenges?
I think the first challenge anybody would talk about was the lockdown.
Okay.
That was a shock to the system, and it was also a shock to trade and manufacturing. So when you look at that and the effect of the 6 weeks lockdown, 2 weeks lockdown, which was the expectation went from 2 weeks to 6 weeks, and from some other businesses to 6 months. Right. And so when you look at those aspects, that was the biggest shock of last year. And it's taken a lot for most companies to come out of it. Some never did, which is the unfortunate part of last year. A lot of businesses also went down with it. And I think it's the learning curve of that we also say that we've learned a lot, because something we've never experienced, we actually have to come out of it a little bit better. And I think one of the biggest criteria was people having to restructure, refinance, reproject their earnings for last year. And it was more of survival rather than a projection of growth.
Survival of the fittest.
That's basically what happened last year.
All right. Now, the optimum productivity of the manufacturing and industrial sector is said to be key for other sectors, to reap optimal gains, this year. Now, looking at some of the reforms introduced by the government, we have the KAMA law. There's also cost-reflective tariff. There's also the removal of the subsidy. Okay, so how do you see these reforms driving the growth of the sector in 2021?
I think the reforms are commendable. But the key thing in any reform, it's what's the reality. The KAMA law is a bit more progressive towards the SMEs and the MSME businesses, which is good. The Finance Act is a bit more progressive also on the MSME businesses in terms of taxation. And when you look all around, these are good. But sometimes I always say, look, what is the reality? Now, is it all about reforms of laws, or what do we do to create the realities of enabling businesses to actually do better? Now, if you take, for instance, we've been talking about the port congestions. I think this is now going back a couple of years now. Last year, it's even worse. Right. Now, to me, I think we're getting to a situation where we are creating inflation unofficially. Now, we make assumptions of how to ease business, but then we create bottlenecks somewhere else. Now, if today it takes you 1.3 million naira to take a container out of the port into your warehouse in Lagos, not out of Lagos, then I ask you, something that I used to do for 90,000 naira has now cost me 1.3 million. Correct. What is the cost of that product or the raw material? You've hiked it up. Now, so the reality is we're looking for solutions of reforms, but we are not looking at what creates cost increases in any business, especially manufacturing. Because the bottom line is you're looking at your cost of production. So if my cost of carriage, already we've devalued the naira. Now, you now have additional cost on top of it, which is a case of logistic cost has now gone up. Then the demurrage cost has even got worse, because now your goods don't come out in 5 working days anymore. They come out, if you're lucky, in 2 months. I've got containers at the port now that yesterday I was told has already done 60 days. Wow. And some of these are not helping the cost reduction that the government is trying to do with some of these reforms. So those are the realities. And these are the realities that we had a bad year last year. We are already in a new year. And we're still seeing the same problem. What do we do to elevate these problems? And that, I think, should be the first point of call. How do we get this cost down so that inflation could come down? So if you're looking at manufacturing inflation cost that has gone up, and benchmark all the inflation rates, and look at where yes, we all know agriculture has gone up. Yes, borders are opening up. We're trying to balance what we can produce and what we can't. But nevertheless, we are a country that is looking for industrialization, but we cannot benchmark cost up and then expect benchmarked inflation to be down or manufacturing costs to be down.
Now, you are a player in this sector, and you operate in this environment. You're talking about, okay, what do we do? For you, what should we do? I mean, looking at the fact that the central bank, yes, is talking about backward integration, you know, for those of you that do business and you import a lot. Look at the amount, and NBS is telling us that, I mean, they spend on importation 9.28 trillion naira just on importation. Okay, so how do you backward integrate? How much of that do you apply in doing business here in Nigeria and perhaps your other members of your association? Yes.
First and foremost, I'm one of the people that believe I'm very passionate about made in Nigeria. I'm very passionate about local manufacturing, and I'm very passionate about creating job employment through industrialization. Now, but we need to toe the right part. Central bank figures, central bank interventions are very good. Development bank interventions are very good. But the question is what sometimes is the reality. And we need to have synergy. Now, take, for instance, the central bank. You're looking at, okay, we've saying we have in manufactured imported goods of 9.2 trillion. And we've been talking about backward integration. We've been talking about moving manufacturing into Nigeria. We've been talking about increasing manufacturing. And it's a necessity, especially now that we're going into AFTA. We don't want to turn to the buying country of the whole of Africa. We really need to turn to, we need a balance of trade. And the balance of trade means we need to have a balance of export against import. Now, if we're going to create a balance, how? Now, we have deficiencies in Forex, fact. How do we improve? We need to have targeted directions. And what I mean by targeted directions, now you have an intervention fund. I'm a beneficiary recently of intervention fund. Quite a lot of manufacturers have benefited from the discounted cash cash funds that is being put together by CBN. Now, the question I asked when some of us got this fund is, it's for manufacturing, it's for backward integration. For instance, Coleman is building now the first marine cable factory in country, and will be the only marine cable factory in Africa, second in Africa. We're also doing the first fiber optic cable, which will be done by September. Will be the third fiber optic cable production in Nigeria and in Africa. Now, fantastic. But the question I asked when I actually got some of these funds is, where's the FX? Now, you've given us funds, every manufacturer funds, or some of those that have benefited, funds for this manufacturing. You have machines to buy. We couldn't get the FX. It became such a bad scenario that I had to go back to the bank and borrow again Forex to buy machines for backward integration. Now, you've got this subsidy, 9% interest rate from the central bank, which is currently running at 5%. But you have no access to it. And one question I asked when there was a stakeholders meeting, I asked the DG of LCCI to ask this question, and also the MAN DG. I said, one question, please. Are we collecting money to bloat the balance sheet of commercial banks? Because if you've given me billions, and I've given it to the bank, to please find FX for me to buy machines. And I've got no FX in 1 year, and I'm still paying interest. I asked the question, then what's the point of these development loans? So we need to actually target what the solution is. If you tell people, come and develop, do backward integration, you must make sure the FX is available for the machine. Secondly, now, how do you solve any manufacturer's problem? Raw materials. Some are local. In our case, we're lucky today, we can say we're getting to a situation where we're about 60% local. And this is fantastic, and we're trying to get it better. Part of the backward integration, which we're also doing, is to actually improve the figures to about 80, 90%. Now, which is also part of this funding. Now, the question is, when you're looking for local source, and you don't have the funding for some of the key raw materials, and the funding is not available, then we go back to the black market scenario. You go back to the alternative market. You go back to the
So that means there's still a heavy dependence on imported raw materials then?
A little bit, but it can be critical. It might not be major, but it's just like in cable. you have different aspects of materials that make up a cable. So if I want to make an armored cable, for instance, I'll have the copper content, maybe aluminum copper content, I have the PVC content, I have the steel content. Copper, I can get some part of it locally now, which is good. Part of PVC, I can get part of it locally. Steel wire, I can't. Now, but without the steel wire, that cable is not complete. It might be only 5%. But it is not complete. Now, but what makes us different, I'll say, as a country, is to move into an export scenario, which we are also moving into. Right. So if you want to tackle anything, we need to make sure we enable even the 5% so that the person can be competitive. Since he's already got 80, 90% local, there's no way he's not going to be competitive out of Nigeria.
Okay, Mr. Norfolk, just a quick one before, we end this conversation. So looking into 2021, what is your outlook? Is it bleak? And with the rising cases of COVID-19?
I think it is going to be, for me, I'll say I'm still a bit more optimistic, but I'll say it's stable to negative. What I mean by that is stable to negative. The outlook of business, especially now, because no economy wants to shut down anymore. So we've got a bit of stability. Stable to negative in a situation is the scenario of what we have in terms of the bottlenecks that is making business a bit difficult, and COVID we might still have a bit of a rise, but we are going to have to manage it. But I will say one thing, with every economy that we have all seen today, is that the rebound of COVID has been very positive to most economies. And it is going to be positive to the manufacturing sector as long as we play the right tools and we get things right. Once we play the right tools, I think Nigeria will benefit a lot from the rebound.
Thank you very much, Mr. Norfolk. It's always a pleasure having you. And please do come back again.
Thank you very much
Thank you for joining us.